keynote session that is bringing it all together, the rise of account aggregators in BFSI. For this, I would like to invite Mr. Kamal Bhatia, Senior Vice President, Chief Credit Officer, SME Finance, Tata Capital. He is a Chief Credit Officer, brings over 20 plus years of experience in credit risk management with a proven track record in overseeing substantial portfolios. Currently managing a portfolio of around 22,000 CR across 6 verticals in SME at TCL, and have consistently demonstrated expertise in risk assessment and mitigation, proficient in digital credit risk management by leveraging technology and data-driven models to enhance the quality of the portfolio, ensuring for a forward-thinking approach to managing risk. With extensive experience and innovative methods have been instrumental in strengthening credit policies and maintaining the health of SME credit portfolio. Can we have a great round of applause for Mr. Kamal Bhatia?
The topic for the day, which we have today, is about account aggregators. The last panel discussion had covered about the data, the usage of data, and the wide use cases as well as the limitations that we have in today's scenario. So I would like to cover what was the requirement for the account aggregator, how it has evolved over a period of time, what are the use cases, what are the challenges, and how is the data protection regime in India having evolved over a period of time. Before I begin, all of us are aware the data, the financial data, is basis for any of the credit decisions to be taken. In India, we are not completely spread as far as the credit is concerned across geographies, across businesses. So what is hampering this flow? The key component, key ingredient which is impacting this flow is data. So data can be in what form? What should be the right data? What should be done to make this data available at real time? These are some of the points that I will cover in the subsequent slides. So the account aggregator framework was actually thought about in 2016. So for a credit decisioning to happen, as I mentioned, we need 3 data sets. The first data set is pertaining to the income. The second data set is pertaining to the hygiene and bureau. The third data set is pertaining to the existence of the borrower. In Indian context, traditionally the credit decisioning has been made on the historical data. Historical data meaning the data which is available at the end of the year. To address this problem, this data aggregation framework was thought about in 2016. It was put into place in 2020. As all of you can see, the data traditionally, the way it used to exist was in silos. What do I mean by silos? I mean the data used to exist in various groups with various institutions. It was not available at one place at one point of time. So the objective of the data aggregation framework, the objective was to bring everything at one place at one point of time. And obviously it will have advantages for the user as well as the FIUs, which we'll cover in the subsequent slides, to use that data. The next question is, how does this framework work? This framework primarily works wherein, as I mentioned, the data is taken from the FIPs to FIUs. So the information providers, it is taken from the servers, from the data banks of the banks or the financial institutions. It is brought at one place, then it is sent to the users of the data. Earlier, the way it used to happen, all the data was taken in physical format. It used to have time gap, but the intent was, the accounting framework was after the consent, as the last forum also spoke about. The consent is paramount, and this complete architecture of data aggregator works on two key pillars. One is consent and second is privacy. These are the two key things which are there both in the DAPA framework as well as the data protection bill which has been passed by the parliament. Obviously, the account aggregator is blind. Why I call blind? They cannot use the data. They can just pass the data. They cannot see the data. They cannot use the data without consent of the user. As we move forward, the stakeholders in this account aggregators framework are primarily the financial institution providers, the financial information users, customers, and their regulators as well. This complete framework is regulated by various regulators, including RBI, SEBI, IRDA. RBI, in fact, has floated the complete guidelines on it, all the licenses, all the regulations around this piece prior to the data protection bill, which is tabled in Parliament, was in fact guided by RBI only. There are various use cases which can be thought about with this framework. In fact, the last panel also spoke about various use cases which can be there. Some of the use cases underwriting all of us have spoken about are also there in the wealth management space. They are also there in the credit monitoring space. They are also there from the financial inclusion perspective. Going forward, as we move forward, as we will be able to handle the challenges which are there, which I will take through in the subsequent slides, the usage is bound to increase. I can tell you with the experience, this account aggregator framework is not only useful for the retail assets, it has got tremendous potential for the SMEs as well as the corporates, because the bank statements are, if the corroborated with GST data, can provide a lot of insight with respect to the activity level, with respect to cash flows, with respect to overall financial position of the borrower. As you can see, the account aggregator framework, since it was launched, has evolved over a period of time. Still, the adoption has to increase, specifically for some private banks. And also, apart from adoption, there has to be intent and there has to be availability of data in right form. What do I mean by that? We'll cover that in the subsequent slides as well. But you will observe in the subsequent slide the usage of this framework as it is visible on the PPT. The slide itself has increased over a period of time. There are almost 133.31 million transactions pulls which have happened in this framework, and this data is basis the data which is available on the Samati website. Now the next question is where all this data is getting used. So friends, this data, 75% of the use cases practically in today's framework are from the underwriting side. The usage from the wealth management side, the other innovative use cases are still evolving. So from the capital market perspective, as the earlier forum also spoke, from the wealth management perspective, the adoption is yet to get completely done. It is progressing, but it is largely from the retail asset perspective, wherein the account aggregator framework is getting used. Now the question is, why there is slow adoption? Why the adoption is not there? Practically, there are various challenges that we will go through in the subsequent slides, but the larger issue is the timely sharing the data, building the right API structure, ensuring the data is available in right content. कई बार ऐसा होता है, there are API failures, there are downtime failures, wherein somebody is wanting to pull the data, but in spite of all things which are available, the data cannot be pulled. This is one of the interesting use case for the account aggregators, wherein the wealth management solutions can be provided, the right wealth management solutions according to the requirement of the customer, according to his financial risk profile, according to what can be beneficial to the customer can be provided. As I mentioned earlier, the data aggregator framework, the key pillars are privacy, the key pillars are consent, the key pillar is convenience of use by the user as well as the provider of data. From this, there can be many more other innovative use cases which can be thought over. As I mentioned to you, the account aggregator framework today is largely used for the underwriting piece. And from the underwriting perspective also, it is largely used in the retail assets. The usage in the SME and the corporate space is lacking. So all of us are aware this is one of the use cases which is there. In addition to the one leg of aggregation of data in some form is available in GST. Today, if we see the GST data and if we are able to interpret that in rightful manner, it provides a lot of insights with respect to operations of the customer, who are the customers of that borrower, how sticky are the customers, and if this is combined with the cash flows which are there in the account aggregator, then you will get practically everything from the cash flow statement perspective. In addition to this, government going forward, this is the long-term plan, is to use this framework for various subsidies, various assistance that government is providing. In addition to the underwriting, in addition to the wealth management, the other use cases of this framework can also be there on the credit monitoring side and the collection side. Credit monitoring perspective, if there is a repeat consent which is already taken at the time of onboarding a customer, this can be used to understand the cash flows of the customer. If the cash flows are not moving in the right direction, the end use of the facility, the way it was thought, whether that fund has been deployed in that manner or not, this mechanism can be used from that perspective also. Moving on. So there are concerns around account aggregator framework with respect to the usage of the data. What will account aggregator do out of that data? So friends, the way it is designed, the way it is thought about, account aggregator is supposed to be blind. They cannot see the data. They cannot use the data. Of course, there are concerns around sale of the data, whether this data can be sold. But the account aggregator framework, the business model has to be that itself remunerative. It should be itself workable so that these type of concerns are not there. With the data protection bill coming in, with the API regulations happening, the way in which data can be stored, the way in which data can be used further, these concerns will only get mitigated over a period of time. So friends, we all spoke about the data empowerment and architecture, which is data framework, which is basic framework for the data aggregator. In addition to this, there is a data protection and privacy bill. And in fact, just to share with you, Reserve Bank of India, the way data should be used by all regulated entities is getting monitored by them also at the time of their annual audits. So what do I mean by that? So for example, you have taken a customer's consent to pull the data for underwriting purposes. You should not and you cannot use that data for cross-sell purposes without explicit consent of the customer. In addition to that's getting emphasized in the bill, the regulator is also keeping a watch, keeping an eye on this at the time of their recurring audits as well. So the law is very, very clear. As I mentioned, at the cost of repetition, I am stating the framework is based on informed consent. It is based on privacy. It is based on usage of the data for the purpose for which the data was pulled in. As I mentioned to you, privacy is the fundamental right. The data should be used. There are 4 regulators for this framework, the RBI being most active. They not only put in this framework from the regulation perspective, they monitor this very, very closely in their regular audits. And if there are breaches on this, then the regulated entities also face penalties and other implications as the case may be. Having talked about data aggregator, and we have seen the last 6-year journey, what is, not 6 years, my apologies, last 4 years journey, what is impacting the adoption of this, in addition to the points which all of you can see on the screen, the rightful earnest on part of all participants to share the data without creating any sort of roadblock in whatsoever format will only help growing this framework. Actually, some of the participants feel that data should not be shared. There can be technical hiccups as well. But once this challenge is handled, it will only pave the way for the larger adoptions. The data consistency challenge is one of the largest challenge. Also, API performance, as we call the architecture of API, the way the data should be pulled, the timeline in which data should be pulled, the way data should be stored. These are some of the points which are critical from perspective of larger adoption of this framework for larger good of Indian economy, for banks and everybody. So that is all. I had tried to cover briefly this. This is a vast topic. We can spend more time on this, but in case you feel there are questions, some points need discussion, happy to take up that.
Regarding, is there any case study where the account aggregator was identified for breach of data or breach of sharing?
So there are no specific case studies as such, because the regulated entities, I will not be able to take the name in this forum, but I can only tell you the regulatory entities, meaning the fintechs and banks, are being monitored by Reserve Bank of India very closely for the data they use. So for example, agar kisi ne data is used for one product in one company and other subsidiary of the same group is using that data without customer consent, that is not seen very positively by the regulator.
Thank you for answering, sir.
Mr. Kamal to please stay back on the stage. And to do the honors, I would request Mr. Neeraj Rathi from Angel One AMC to felicitate Mr. Kamal Bhatia.